Welcome back to the World Lens podcast. I'm your host, Michelle Evans, and today I am joined by WTCI board member and president of McIndoe Risk Advisory, Bruce McIndoe. How's it going, Bruce?
It's going cold. We
Very,
always say
very, very true.
February is the longest month.
Longest, shortest month ever.
Yep.
So, Bruce, we're going to talk about China
Yeah.
because the numbers coming out of Beijing, they tell one story, but the reality for Chinese households tells a completely different story. Uh, China just hit its 5% GDP growth target for 2025, but nearly 30% of their industrial firms now operate at a loss. Housing values have dropped over 14% since 2021, and millions of college graduates can't find a job that match their education. From a risk advisory perspective, what does it tell you when headline economic numbers look solid, but the underlying mechanics are breaking down?
I guess you have to look at China and, it tells me that growth is being managed, not
Mm-hmm.
generated, right? So I think that's on the top line. When GDP hits, Xi's target, the government target, but firms are losing money, assets are losing, value deflating. We'll talk about that.
Mm-hmm.
Graduates are underemployed. The system is absorbing stress rather than resolving it. So that's a classic indicator of rising structural risk. And
Mm-hmm.
so, from a risk advisory, that's what we look at.
So, what should global companies be watching out for? Are there early signs, or is this just like China's new normal?
Again, as we advise, I would say both.
Okay.
It's I think it may be kind of China's new more normal to in terms of like slower growth and state guided growth, where investments are made and how that's happening. But for companies, I think it's a early warning on margins and demand reliability, especially out of the
Mm-hmm.
consumer sector, workforce quality, because
Mm-hmm.
those millions of graduates aren't expanding their
Right.
minds and doing things. And then I guess it's also always in China, policy intervention risk would be another one.
Economists are describing China's deflationary problem as systemic, but prices have
Hmm.
fallen for six consecutive quarters, longest streak since China transitioned to a market economy. Beijing cracked down on price wars in July, but consumers are so depressed that the property market's so weak that the government intervention hasn't worked. Can you explain how this deflationary trap works and why can't China just, print more money or cut interest rates to fix this?
Hmm. So, deflation, is a sustained drop in prices, right? It's
Mm-hmm.
caused by, weak demand. People are delay spending, which also lowers demand. Businesses cut back. Economic activity slows, and that's really the challenge in China year over year is that slowing down and consumers becoming well, like it's like you said, can you do it with the money levers, right? So
Yeah.
it's not just a money problem, it's a confidence and balance sheet problem, right? So
Mm.
you can print money and you can cut rates, but you can't force people to spend it. And
True.
especially if they're worried about the value of their homes, which are so important in China, and a lack of confidence in the future. And that's, I think, the key, headwind that they're running into.
One Chinese economist says that they need to pour $500 billion into consumer vouchers, or else people will believe that inflation won't come back. Is that realistic, or is it a multi-year strain?
Yeah, I looked at this, a $500 billion consumer voucher program,
Mm-hmm.
question mark. It's like, really? Maybe over multiple years, but I guess at the top line, you know, China can absolutely afford it, right? I
Mm-hmm.
think that half a trillion is, I around 20-25% of GDP. I mean,
Hmm.
it wouldn't be
Yeah.
like if we tried to do it, right?
Right.
So that's not the issue. I think the real question was, whether something like that would actually work.
Hmm.
I saw when I was reading about this that these vouchers were to like get services for like child care and adult
Right.
care and those kinds of things rather than consuming goods. And But the deflation problem, as I said before, is just weak spending, and it's a crisis of confidence in the
Hmm.
consumers. So I think the property market has basically collapsed. Households are scared because
Hmm.
that's their big, and that's the big store of wealth. Saving rates are, of course, off the roof because people are just
Yeah.
accumulating that. So I think that vouchers treat the disease. Treat the symptom and not the
Just not the
disease,
disease.
and
Yeah.
that would be the bottom line for me.
Speaking of disease, is there a risk of
Uh-oh.
global contagion?
Uh,
Can they actually like export deflation to their trading partners?
yeah, I mean, global contagion risk that they can, bring this on is absolutely out there through what they're doing, cheaper goods, excess capacity, industrial and manufacturing capacity, aggressive pricing. When they pour that into a country,
Hmm.
it pressures margins there and globally, wherever they do. And I think
Yeah.
that's, it complicates other central banks and how they deal with it. And as we've already seen in the last year, almost certainly will raise the risk of trade friction, and countries try to shield their
Right.
workers and their businesses, and we have trade tariffs and all of that just churns, right? So
Hmm.
and we can see that with Chinese EVs coming into the US. They literally could come in here and just wipe out the market at
Yeah.
substantial discount off of what people are paying for EVs now. That would be an example.
Hmm. So in China, owning property isn't just about wealth, it's basically a requirement for marriage. But 85% of real estate price gains, poof, since 2021.
Yeah.
Estimates suggest China has 65 to 80 million vacant homes. That is a lot. That's enough to house Germany's entire population. Why is Beijing essentially giving up on propping up the housing market? Do they have a strategy, do you think?
Um, yeah, I mean, the Chinese government is a managed economy, and they're very much for planning. They're not managing the economy in the moment, right? They know. So,
Mm-hmm.
for example, okay, there's 65 to 80 million vacant homes. I think the through line in our discussion here is going to be around demographics in China,
Mm-hmm.
right? And we're going to see, a precipitous decline in, how many people are in China. So those vacant homes may never have buyers,
Mm-hmm.
right? And so that's one thing. But I would say they have to look at this and say, look, propping up that in that headwind of demographics, what I call kind of weakening demographics,
Yeah.
is more dangerous than letting it deflate because they can see what's out there, right? So
Mm-hmm.
it's stopped becoming a growth engine. Clearly
Yeah.
it's a systemic risk, and they have to deal. So I would say that Beijing's strategy, from my perspective right now, is controlled deflation, right? So they
Mm-hmm.
need to prevent collapse of the market. That would be really horrible. We just need to absorb those losses over time and shift the economy away from property-led growth back to your vouchers. Can we start generating consumer demand? So
Mm-hmm.
somehow they've got to kind of stabilize that housing asset and create more confidence in consumers to spend, and we'll
Yeah.
see how they do.
Yeah. They produce 12.2 million university graduates every year. and most of them end up as delivery drivers or they can't find work. Youth unemployment is around 17 to 19%, but Beijing is doubling down on automation and AI, which is making it create fewer jobs than what the traditional manufacturing middle class Chinese economy is. This seems dangerous. You have this massive education investment producing workers for jobs that don't exist. What are the political risks of having millions of educated people and underemployed young people?
I would say it's one of the most destabilizing combinations a wealthier country can have, right? High
Yeah.
expectations, high education, low opportunity. It's not a good situation. So, even without necessarily open protest, which is obviously suppressed actively in China, it drives quiet disengagement and
Yes.
to some degree grievance. So you have lower trust, you have delayed family formation, back to the
Hmm.
demographics, right? You have risk avoidance. You have a growing sense that the social contract isn't working anymore, right? So though that was what I think is they're facing.
Can we expect to see, this their talent leaving to go abroad for opportunities? Do you think that's going to accelerate with the way that this is going?
Absolutely. It took a bit of a hit because of Trump administration actions and delaying visas and those kinds of things. So I would say selectively, but not a tidal wave right
Okay.
now. But I most of the kind of what I the globally mobile, technically skilled, internationally connected talent out there in China will just keep leaving. Not
Yeah.
as a protest per se, but just optimizing the value of what they have obtained. So I'd say the risk back to China is as this brain drain moves into other countries and not necessarily the US, right? Even
Right.
though most of our major tech producers are run by Asians, not
Yeah.
necessarily Chinese, but Asians. You lose that innovation talent, which generates no new companies and no
Hmm.
new ideas, and so you just kind of I would say deepen the confidence gap. So,
Yeah, you mentioned that, China's leadership prioritizes technological dominance, export competitiveness, self-sufficiency, over the consumer welfare and job creation. But the trade surplus hit a record $1.2 trillion dollars in 2025, but it's not because the exports went up. Exports rose only 5.5%. It's because imports barely grew, revealing weak domestic demand. Meanwhile, China now operates over 2 million industry robots,
yep.
the highest in the world. Bruce, help me understand this from Beijing's perspective. Why choose this path? Like, what's in it for the long game?
Yeah, and I think what's in it in the long game is Beijing is playing the long game, right?
Hmm.
So kind of back to demographics.
Yep.
I think at the macro level, this is a national power strategy, right? So they want to reduce vulnerability to foreign technology and foreign sanctions and all of those things. They want to lock in their dominance in
Hmm.
advanced manufacturing. So by having robots and in the factories and those kinds of things, that they can produce a lot with fewer people, which they know is coming in the decades ahead. And so I think that's a clearly strategic.
Hmm.
And I would say the long game here is that China wants to be resilient and through self sufficiency and scale, even if the internal consumption lags, which is, I would say, also where India is going, right? Moving and bringing all of that, but they have the youth dividend way for decades ahead, right? So you're going to see
Right.
China demographics
Yep.
down, India up, and we'll see how that plays out and who ends up being number one, right? So
So is this automation first strategy sustainable when it's basically creating a job crisis? Or is it just planting more seeds for social instability?
It's sustainable economically in the sense that it's going to keep those factories competitive on the world stage, right?
Mm-hmm.
So that's key. Um, it's yes, politically risky and keep shrinking the ladder into that middle class, and it's going to create, anxiety and anger. They can buffer that a while with public employment, targeted support. But as the pressure builds, they may have to look at like a robot or a human replacement tax, right?
Mm,
That says, okay, manufacturing, if you put in 100 robots and displace, let's say 200
100 people.
employees, a percentage of that has to go toward minimum income for those, people.
Mm,
So they can, and being a top-down state government, they can just say, we're going to do that, build that into your economic models, and let the robots, pay
yeah,
pay for the citizens to have a average life, a middle class life.
it's not a bad idea.
Yeah.
We've seen the EU, Indonesia, and India already imposing targeted tariffs on Chinese goods as China floods the markets with cheap exports just to compensate for their domestic weakness. How does this reshape their global trade relationships?
I think it accelerates a lot of what we're dealing with right
Mm,
now, the shift from free trade to managed trade, right? So more countries respond with, kind of anti-dumping, put
mhm,
these sector tariffs, local content rules, subsidy, races is like for key industries, that kind of stuff. So I think, that it's going to result kind of more fragmentation. Companies are going to sell into like economic blocks, right? So instead of
mhm.
this broad world, you're going to see, the BRICS and maybe China, Western, whatever, however it ends up sorting out. And, you know, they're going to just have to plan for policy and trade risk as a permanent cost of doing business. Yeah.
Yeah. The IMF, International Monetary Fund, is projecting near zero consumer inflation in China for this year. They've warned China that it's too big to generate much growth from exports, and continuing down this path risks furthering global trade tensions. Give us a 2 year outlook. Can China escape this spiral of deflation without any fundamental policy changes?
One thing about China, when you quote things like, the numbers are managed as well, but they're, so that's, so I'd say kind
Mm-hmm.
of, they're not cleanly, and they'll probably manage the numbers as much as the reality.
Mm-hmm.
They can stabilize the symptoms, with these, targeted stimulus and vouchers and other administrative measures on, with the populace. But escaping a deflationary mindset, right? It's
Mm-hmm.
going to require something a little more creative, in pivoting toward household income and social safety nets and
Mm-hmm.
building confidence, right, in future demand. So without rebalancing that, and you get a stop start fragile recovery, and I think it's very difficult.
Yeah. So for American businesses and investors that are still kind of betting on China as a growth market, what would your advice be? Is it time to reassess?
Yeah, I don't. I mean, the companies I work with have their eyes open, But yes, one
Mm-hmm.
should always reassess their thesis anytime there's new data in the environment, right? So,
Mm-hmm.
uh, because of this, because of demographics, you're not going to treat China as a broad consumer growth story, period.
Yeah.
You have to treat it, as a selective market for certain things that has, high policy risks that I mentioned before.
Mm.
You have to double down, where you have pricing power and a defensible role within the Chinese market,
Mhm.
and keep your, the China operations that you have focused on that domestic market, so that you don't run into what we have seen in the last year, which is the whole tariff stress and localization
Yeah.
demands and all that kind of stuff. So it's tough. It's going to be a tough
Hmm.
market if you're in there. Like, if you have a competitively priced product that's attractive to the market, I think you can stay the course. If not, you're not going to be able to
Yeah.
hang on.
What's one metric or indicator that you'll be watching closely over the next 6 to 12 months?
What we have been watching in the rearview mirror as well, import growth, right?
Mm.
That defines that consumer, domestic consumers are consuming if they have to import more, and if they stay flat, then it's a literally a real-time signal that the domestic demand is still weak, right?
Hmm.
So no matter what numbers China comes up with, or what the GDP headlines say about growth, if that's down, then demand's down, and the headwinds persist.
Mm. This has been very interesting. Honestly, a bit unsettling when you think about like the ripple effects it's going to have globally.
It
But
it can. Again, I come back to China. It's a managed economy, and it has a command and control system, right?
mm,
So they are looking at this in the telephoto lens, right? So not what's the next quarter or the next couple of years. They understand that, they're going to lose close to 200 million workers in the next decade
yeah,
due
that's a
to
lot.
demographics, right? And by like 2050 or so, it's going to be, another 200 million. And when I was looking at the demographic curve, and that's essentially the entire labor force of Germany and France combined. That's how
Wow.
massive this is. So they are they're heading into that with their eyes open, and they're trying to
Mm,
manage work, dealing with that in the next decade and two. So, so
interesting.
yeah, it's not easy. No
No.
buffer.
Well, thank you for breaking it down for us.
Sure.
Always a pleasure. We'll definitely be keeping an eye on how this all unfolds over the next few months. Um,
Uh,
if you want,
we will feel how it unfolds over the next few
oh
months
God, yeah, unsettling.
and years.
If you want more insights like this, member news, and information about upcoming events, visit WTCI.org and follow us on all social channels at WTC Institute. Until next time.